Time now for this week's market segment, and there's lots to get through with this week's analyst. Wet weather and slow to mature crops are making for an interesting harvest season, plus the quarterly grain stocks report offered up some surprises. Tradas's Doug Simon joined me on Wednesday to catch us up.
Well, we had 2 to 3 inches around Lincoln on Tuesday night, an inch of rain in other places, and it's been the crops have been just very wet in of themselves because they have not been drying down that quickly and they're slow to mature. So we have this harvest that's going to be drawn out, and this rain here this last week's not helping things. It's supposed to dry out next week some, but temperatures aren't going to be going back to the really warm, temps that we had last week. But so the harvest is still going to be pretty slow going forward for both the corn and the beans.
And that's impacting crop conditions, I guess, too, because corn 74% good to excellent, 52% mature, that's behind. Soybeans 75% good to excellent, dropping leaves at that same percentage. So what do those numbers say to you?
Well, we're way behind, what we typically are, and so I think a lot of these, grain elevators and end users that are needing corn, they've firmed up their bases to try to attract corn and beans to come into their houses. Looking forward, there was pretty good carries in the corn and the bean market, but they're going to do things that they're going to tighten up this basis, I think, and probably the carries also to try to attract corn coming into these elevators.
And I know a big thing you've been tracking this week, the latest quarterly grain stocks report that's come out. What's the big story in your office?
That was a huge report. I mean, we haven't seen that big of a swing in expectations, and how those came in. They came in 300 million bushels below what the average trade guess was, which was pretty substantial. We were expecting kind of corn carryover for this end of the year at about 2.4 billion bushels, what the USDA report said in September. And now it's going to come in at about 2.1 billion bushels. It has big implications going forward into 2019-20 as well, because your carry-ins are lower. Basically, it assumes two things: that they either overestimated last year's crop by probably about 3.6 bushels on corn and about 1.3 bushels on the beans. And on the corn side, they over or underestimated kind of feed use. It implies that we feeded 1 billion bushels of corn in the fourth quarter this year, which is crazy because that'd be 400 million bushels above what we did last year at this time. So it really looks like they overestimated that crop from last year. It also calls into question then what kind of yield should they have been using for this year, for the 2019 crop. Before all this wet weather started and the delayed planting and prevent plant, they probably using a yield up toward 179, so it kind of calls into question. So all this is going to roll into next year's carryover, and so instead of being at maybe a 2.1 billion bushel carryover on corn, we could be down toward 1.6. So all of a sudden you go from carryout to stocks use ratios that were 17% last year down toward 11% on the corn. Beans go from like 1 billion bushels. The bean side of it, they came at about 100, almost 90 million bushels less than what the trade guess was. And those numbers are going to roll in. You kind of look at carryouts next year being potentially down toward 500 million bushels. So this has a big, big impact on futures levels. I think, we had a pretty good rally on Monday, Tuesday. And I think it'll also impact our basis levels as we go forward.
And that leads us into our next question. For basis, you say that it's still hot with corn. So how does that tie into this grain stocks report number, and what opportunities does that present for us?
Well, that's a good question, because every time I've been here over the last year, we've been talking about how hot basis was, and you're kind of wondering, why is the basis so firm?
Yeah.
And it kind of goes to tell you what those stocks being probably less than what was actually out there. They're having to bid a little more aggressively to get that corn to move out of the farmers' hands. That stocks report did show that relative to last year, there was a little bit more on farm than there was in the commercial hands. But also part of it's anticipatory, I think, in terms of what this yield's going to be, for the 2019 crop, in terms of maybe trying to move some of that corn, to eastern corn belt destinations and move that ahead. But that basis is kind of foreshadowed a little bit of that cut in those stocks that, at the end of the year. So that was pretty important. But for farmers coming out of the field right now, those basis levels are historically tight. I mean, they're running 20 to 30 to 40 cents over what they were last year. There's huge moisture discounts. So people that have crop that's been harvested, you want to be, I think, looking at those markets, because that basis is really good, and that's probably going to be, it's a very good opportunity. But also, I think when you look forward, we see a lot of like 10 under basis levels for the December slot. When you look at that number, that's kind of a historical number. I think we'll probably see that number improve too. And what that carry, there's about 12 cents a carry now between December and March. I think we'll see, again, as we go out in JFM, January, February, March, we'll see those basis levels improve out there again. But so we're much firmer on the basis this year. And also our futures price, on Tuesday at 393, we kind of filled that gap that was in the chart that we left on the way down, back in July, August. that, we've had a nice little rally from that, 345 to 350 levels, to where we are right now. So people ought to be looking at those prices today and say, hey, how does this fit in with my marketing plan? I want to be making some more sales in here.
So all this being said, what does it mean for corn and soybeans going forward?
Well, the big thing, this tightening up in the carryouts is important, because when you looked at 2020, potentially people planting maybe 95 million acres of corn and with the big carryout of beans, maybe not plant as many beans, that the potential for corn for 2020 was being down toward $3 if you had more of a normal yield. So this takes a little bit of the burden off maybe the corn balance sheet going, obviously for this current crop that we're harvesting, but then into 2020. A big thing's going to be, I think, in terms of South America. How much corn is Brazil, Argentina, what kind of bean crop they're going to plant, how many, what kind of corn crop they're going to harvest. It's a little dry down there right now. A year ago when we were talking, it's kind of the same situation. It's kind of like their March, April, May is the time where they start to get the rain. So they're supposed to get a little bit of rain coming up here, but I'm really, it's optimistic to see this cut in the carryovers, but we have a lot of export competition from Ukraine and Brazil and Argentina. So if we get excited about the things that, were cut out this last week, I think our exports are probably going to have to be cut, and that's probably going to, take some of the enthusiasm out of these prices here. So we've got a lot of export competition in the world, on corn, beans, and wheat. Unfortunately, that's going to kind of keep things in check.